Even if analysts don't always get their forecasts exactly right, they do occasionally get it right, since they base their research on data that is readily available. Continue to tune in and watch to see what Cathie Wood has to say. It goes without saying that the current state of the economy is not ideal, and the market's stock values reflect this. Numerous factors influence the economy's condition, which in turn influences the growth or fall in stock values. Not even well-known companies or brands are immune to this. You will learn what Cathie Wood thinks about Tesla stock today. The recent global crisis that rocked the world can be blamed for the fluctuations in stock values, including Tesla's. The COVID-19 epidemic, which ravaged several nations, had a significant impact on Tesla's and other firms' supply chains. As China implemented a lockdown in line with its zero COVID policy, however, the Russia-Ukraine war had a significant impact on the country's economy. The United States is currently dealing with the threat of inflation and the potential for a recession. Cathie Wood warned that the United States is already in a recession in late June. In a CNBC interview, CEO of ARK Invest, Cathie Wood acknowledged that she had misjudged the level of inflation and went on to say that the U.S. economy is probably already in a recession. Wood attributed the increased price pressures beyond her initial projections to supply chain interruptions and geopolitical concerns, such as the conflict in Ukraine. She added that a recession had already started, mostly due to poorly managed inventory. "We believe that we are in a recession," Wood stated in an interview with Andrew Ross Sorkin of CNBC. "We believe that inventories, whose growth I've never seen this significant in my time, are a major issue. I have 45 years of experience." The investor who prioritizes innovation claimed that supply chain disruptions and geopolitical concerns were to blame for the higher-than-expected rate of inflation. According to Wood, problems with the supply chain caused big merchants to mishandle their inventory, which resulted in an abundance of some completed goods, such as furniture, which was in high demand during the epidemic. "Even the best-managed companies in the world are having problems," she stated. She continued by saying that in her 45-year career, she has never seen an inventory spike like the one that has occurred during the last year. "We were wrong in one thing, and that was inflation being as sustained as it has been," Wood stated. Supply chain, it's unbelievable that it's taking over 2 years after Russia invaded Ukraine. Naturally, we were unable to witness that. Though it has prepared us for deflation, inflation has been a greater issue, according to Wood. Sentiment data has reached all-time lows, suggesting that consumers are feeling the effects of the sharp price hikes. She cited data from the University of Michigan's Survey of Consumers, which revealed the lowest reading ever -50 in June. According to the Consumer Price Index, inflation increased at its quickest rate since December 1981 in May, up 8.6% over the previous year. We know that innovation in the public equity markets, not the private equity markets, has been ravaged in the last year, Wood stated in a recent interview. It has been devastated for about a year, and Rawls said that when expectations shift, the belief that the economy would expand, interest rates would rise, and inflation would soar, but would be contained last year, does not hold true. The problems with the supply chain persisted despite the modification. Nevertheless, worry over the impact of rising interest rates and inflation initially dominated the innovation sector, but it now appears to be having an impact on the market more widely, according to Wood. "I believe that the concerns in this area will go from probable increases in inflation and interest rates to a recession, particularly because, as you may recall, stocks are building up across the ecosystem." According to Wood, innovation stocks in the public equity markets have dropped by 50 to 75% in the past year. Do you think the price of Tesla stock will be impacted by a potential recession? Post your ideas in the space provided for comments below. A recession, what is it? When there is a general downturn in economic activity, a recession is defined in economics as a contraction of the business cycle. Recessions typically result from a sharp decline in consumer spending. It is a brief period of decreased trade and industrial activity that is typically indicated by a dip in GDP over the course of 2 quarters. Conversely, the pace of growth in prices over a specified period is known as inflation. Usually, inflation is measured broadly, as in the case of a country's cost of living increase or general price increase. Although there are many predictions of coming economic disaster, the majority of analysts feel that a serious recession has not yet occurred. RK investment Cathie Wood doesn't think so. Known for placing large wagers on cutting-edge tech companies, Wood asserted that the U.S. economy is already experiencing a recession. It has simply not yet been formally proclaimed as such. It's crucial to keep in mind that for the past few years, the official definition of a recession has been 2 quarters in a row of negative GDP growth, which is necessary to comprehend Wood's thesis. By that definition, when GDP data is provided in late August, following the 1.4% GDP decline in the first quarter, it is possible to determine that the U.S. economy is already in a recession. Professor Jeremy Siegel of the Wharton School of Business concurs with Wood that the United States is currently experiencing a recession. Siegel stated to CNBC that the first half of the year's economy most certainly shrank. He went on, "I think we're actually in a mild recession," adding that the signs he was keeping an eye on suggested the recession would likely extend into the third quarter. Specifically, he stated that evidence of a decrease in the money supply in the United States implies that we are getting a handle on inflation. What impact would a recession have on the top EV producer? Over the past 2 years, Tesla has shown a respectable level of financial performance, helped by the booming demand for electric cars, the mass-market Model Y and 3's production ramp, and the establishment of additional production facilities. Tesla increased sales by 87% to over 930,000 units in 2021, while revenue increased by over 70%. Investors are worried about whether the momentum will continue, though, as the Federal Reserve tries to boost interest rates more aggressively in an effort to rein in soaring inflation. The U.S. economy may be headed for a recession. After the central bank raised rates by 0.5% last month, a 0.75 hike may be imminent. Declining consumer confidence is a result of household budgets being squeezed by rising energy, grocery, and housing costs. A portion of the economic suffering has already been priced into Tesla stock, which has corrected by around 45% year to date, as investors have shifted from high multiple growth firms to safer investments. However, Tesla does not appear to be significantly harmed by a recession. Economic downturns usually result in a sharp decline in sales for automakers, but Tesla's business is predicted to do far better. The adoption of EVs is still in its very early phases, and demand for Tesla has typically outpaced supply. In the past, Tesla has projected delivery growth of more than 50% over a number of years, and this year it may reach 60% growth, suggesting that demand growth should continue even in the case of a slump. Furthermore, economic indicators suggest that this recession won't be particularly deep, with bank capitalization being high and household savings having increased since the pandemic. Additionally, Tesla has been improving its cost control, which gives the business an advantage over rival automakers. At its current market price, which is in the $700 range and represents a 54x forward earnings ratio, Tesla stock is still a fantastic deal. Do investors in Tesla need to worry about a recession? Tesla's revenue has been increasing year over year at a steady rate of 1%, with 20% growth occurring in a single quarter. Along with reporting its first profitable year since going public in 2010, the company is almost ready to be included to the S&P 500. Even while Tesla faced a number of obstacles in 2018, its widely reported financial issues are largely exaggerated, and its many detractors underestimate its potential. Regarding the current economic slump, Tesla has performed admirably even if its stock price dropped during the market's February and March freefall from $900 to $360. Tesla is currently trading above $1,500 at all-time highs. This is unquestionably evidence that it can withstand adversity. CEO of ARK Invest Cathie Wood continues to be optimistic about Tesla even in the face of a recession. As of early July, Tesla holds an 8.2% weighting, making it the second largest investment at ARK. In conclusion, Tesla is well positioned to weather economic storms. even though a recession may provide difficulties for the larger market. It continues to draw investors and hold its resilience in the face of economic uncertainty thanks to its robust demand, inventiveness, and strategic placement in the electric car market. Depending on a number of variables, investors in Tesla may or may not need to worry, but generally speaking, the company's growth potential and fundamentals indicate it may be able to weather a recession rather well.